Hi there, welcome for part two. We are covering why Taiwan, why now, and unlocking Taiwan's growth opportunities. And with us in the studio, we have David Lai, CFA. He's the partner and co-chief investment officer for Premia Partners. Prior to Premia Partners, David was the executive director and responsible officer at China Asset Management, and he supervised the company's investment activities and led the build out of the company's ETF platform in Hong Kong, including launching of the world's first cross-border RQFII-based ETF with over 2 billion assets under management. Before that, David has been a portfolio manager since 2002 at Hang Seng Bank, Mirae Asset Global Investments, and Citic Securities International. David has demonstrated proven investment track record in both active and passive strategies recognized by numerous industry awards. David holds a Bachelor of Business Administration degree in finance and a Master of Science degree in investment management from the Hong Kong University of Science and Technology and is a CFA charter holder. I see your slides are up, David, and your camera is on. I'm going to hand the time over to you, David.
Thank you. We would like to have a very quick recap about the earlier section that we mentioned about the Taiwanese fundamentals. It's included very high growth kind of a GDP in the past few quarters. And this year, we are even talking about 4% kind of a growth this year in GDP. And also inflation is no longer a big issue. So that means it's a very supporting environment for the stock market to perform well. And then with the semiconductors industry, the industry is turning around, and also the AI theme is getting more popular. I think a lot of Taiwanese company will be benefit from it. So at this moment, we believe the Taiwanese equity, the stock market itself, offering a very unique opportunity for the global investor to capture right now. So that's why at Premia, we are launching FTSE Taiwan 50 strategy to help investor to take on this riding kind of a trend and will be benefit from the Taiwanese stock market growth. So here is the Taiwan 50 strategy, a very quick features update on that. The first one is talking about is a diversified basket of top 50 leading company listed in Taiwan market. So representing 2/3 of the total market cap. And then second is also may not be so well known for a lot of investors this year. So people are quite a lot of them are focusing on the U.S. market, let's say the S&P 500, the Nasdaq, or even other global equities. But they may not realize that Taiwan stock market is actually one of the best performer globally and also in Asia as well. So this is very interesting. And then the third is that it's a very high-tech manufacturing and also financial-oriented focus strategy, reflecting the major economic contribution in Taiwan, which when we're talking about Taiwan right now is on the right track to take over Japan and South Korea to the highest GDP per capita in Asia this year. So it's getting very exciting. And the Taiwan market is also very unique AI play, given that the global dominance in semiconductor ecosystem with close to 90% market shares in the advanced space trip, which we believe that is very hard to replicate or to place right now. And Taiwan is also a key beneficiary to the recovery of the semiconductor cycle. And the cycle itself has gone through two down years in 2022 and also 2023. But this year, next year, we are seeing a pretty decent growth. So that's why it's the right timing to get exposure in Taiwan. And of course, we are also talking about the potential upgrading the hardware side with the AI equipped features, which will be speeding up the replacement cycle of a lot of hardware. And then in return, will be very strong and positive to the Taiwanese company. Although a lot of investors may understand that it's a very tech focus for the Taiwan stock market, but at the same time, the market itself is also offer a pretty decent dividend yield because traditionally the rapidly aging kind of distribution of the investor in Taiwan, they demand a higher dividend kind of a return. So that's why we are seeing Taiwan's equity is in a very unique space. Is that on one side they're tech focused, but on the other side they're also giving out pretty decent dividend. Uh, Last but not least is the strategy at Premia itself is a very tech efficient, very convenient allocation used for international investor to access the market in Taiwan. There's no U.S. withholding tax, stamp duty, or capital gain tax, and then it's also trading in the same time zone as the underlying Taiwanese market. So that will be very interesting with minimizing the tracking error and also the premium and discount of the price. And for the strategy itself, it's tracking the FTSE Taiwan 50 index. So the index is pretty straightforward. It's captured the 50 largest stock listed in Taiwan, aiming to cover around 70% of the listed universe in terms of the market cap. Of course, the underlying stock, all of them will be listed in the Taiwan Stock Exchange, and the weighting mechanism is free float adjusted, market cap weighted, with a single stock limit of around 30% cap. There will also be liquidity and foreign ownership consideration when constructing the index, and then the index will be rebalancing every quarter. So in March, in June, September, and also December. And on the right hand side, you can see that out of the 1,100 stock in the universe going through different screen, including like market cap, liquidity, and also foreign ownership will be distributed into the final stock pool of 50 number of stock in the basket. With that 50 number of company is indeed is a very representing the overall market because in the past time we are seeing that it contribute close to 80% of the total market return. So year to date the number is around 82%, and if you look extend the horizon into 3 years time, it still contribute around 80% of the total market return. So you can see how strong and how solid of this 50 company in their stock performance. On the bottom chart, you can also see that on average, these 50 company, they have a higher revenue, higher total asset, higher net asset. And in terms of the financial metrics, the performance side, they are also stronger in the gross margin and also in the cash ratio. That means have a higher quality in general compared to the overall market. In terms of the sector offering for this strategy, represented by the green bar, you can see that around 70% is coming from the IT, and then 11% in financial, and then the rest will be in material, communication, consumer, industrial, and others. So this is not big different compared to other sort of like standard benchmark like FTSE Taiwan or the MSCI Taiwan. So this is also is a very comparable benchmark offering a very diversified kind of a sector exposure with a sharp focus in technology. So compared to the others, it may have a very slight overweighting in the IT and also financial. Among the top 10 positions, you can see that most of them are pretty interesting. The first one, of course, is a TFNC, 31%, because of the strong stock performance, but every rebalancing will come down to back to the 30%. So it's the world's largest the foundry with the leading edge technology, 60% overall for the semiconductor manufacturing market shares, and close to 90% in the advanced computing space. Second one is the Hong Hai Precision with 8.2% weighting. It's a global leading contract manufacturer of electronic products. So, a major Apple supplier. I think everybody probably understand that is one of the key supplier for Apple products, covering the full range of the offering. But at the same time, it also has other consumer product for Sony, for Xiaomi, and also Nintendo. It's also partnered with NVIDIA to develop AI server and computing center. And the third one is MediaTek with 6.8% in weighting. It's one of the leading fabless design company and the second largest third-party supplier of smartphone SoC. It's providing chips for wireless communication, mobile devices, navigation system, and the power management for mobile devices data center. And the fourth one is Delta Electronics, 3.2% in weight. It's one of the leading producers in EV charging system, power management, and PV inverter. Quanta Computing is 2.7%. The fifth one is one of the global leading manufacturers of laptop and also electronic hardware for Apple, for Dell, HP, and also Acer. Fubon Financial, the sixth one, is the second largest financial company in Taiwan by asset. And then the UMC, the seventh weighted in the portfolio, is the first semiconductor foundry in Taiwan since 1980. It's also a global leader in OLED displays in driver in smartphone. And then the eighth one is CTBC Financial, is one of the largest banking conglomerate in Taiwan, and it's also the most internationalized financial institution with over 100 overseas branches. And then the Cathay Financial, also a financial conglomerate in Taiwan, covering banking, insurance, securities, asset management, and indeed, Cathay Life is the largest insurer in Taiwan. And then the last one in the top 10 position is ASE Technology, larger chips assembly, testing, and packaging by revenue in 2022. So that is the top 10 position in the portfolio. And if you look at this table, you can see on the right-hand side, in terms of the profit margin, return on asset, return on equity, dividend yield, and payout ratio, this top 10 companies and stock is also offering a very decent numbers. On average, the profit margin is about 16%, and ROA 6.7%, ROE 17.5%. Dividend yield 3.45, and the payout ratio is 64.7%. So it's still a very healthy kind of ratio in giving out the dividend. And this table lists out all the 50 number of stock in the portfolio. I won't go through all of them, but you can see that quite a lot of them is coming from the IT, financial, and then consumer, material, communication, and also energy. The performance side, you can also see the green line representing the FTSE Taiwan 50 30% cap. We here compare to others indexes like MSCI Taiwan, MSCI Asia ex Japan, and then MSCI emerging market. So you can see the performance has been consistently pretty strong. Year-to-date number, 6 months, 1 year, or the annualized number as well. Volatility is a little bit higher, but given that strong performance is understanding. But if you look at the maximum drawdown, it will be quite similar to the other regional indexes. But you can see over the years, the outperformance has been quite strong. So this is the strategy in terms of the performance. So in the last part, I would just want to highlight some of the key company or the stock so that the audience has a better understanding what this strategy is investing in. For example, TSMC is the largest foundry with a revenue actually 3 times higher than the second player, Samsung Electronics, dominating the market with 90% of AI chips. And globally, TSMC is the sole supplier of Apple and NVIDIA for the advanced chips. So it's a very unique kind of a strong mode, given that the massive R&D investment over the years We mentioned in the early section that in 2022, it has around 40 billion capex. 23 is also 40 billion. This year, we're talking about around 30 to 32 billion in capex. So you can see that it's very hard to replicate this kind of large amount of investment from other players. And it's definitely is one of the major beneficial for the AI wave and also semiconductor cycle bottoming out this year. On the bottom chart, you can see some of the capex compared to other player like Intel or like the Samsung. And then on the right-hand side, bottom right, you can also see the customer breakdown is also quite fragmented. With the largest one is the Apple, and then Nvidia, MediaTek, Broadcom, Qualcomm, AMD, Intel, Sony. So it's have a very diversified kind of a clientele in its business. Second company we want to introduce is UMC. It's the global number 4 foundry and is indeed the first semiconductor foundry in Taiwan since 1980s. As relative to the TSMC, I think UMC is more focusing on the mature legacy chips, which has around 44% for Taiwan in the overall market shares. And it's also a global leader for UMC in OLED display driver in smartphone. Clientele including MediaTek, Qualcomm, Intel, and Apple. It's also a very critical player in the mature node. So that is a partnership with Intel on the 14 nanometers. It is helped the UMC differentiate itself from the other players in the market. At the same time, UMC is offering a very high dividend yield with around 5 to 7% in the past few years' time to income-seeking investor. That is a very interesting profile. And the consistent management emphasizing on the profitability, cash flow stability, and long-term agreement with clients that make UMC has a very unique position in the industry. On the bottom chart, you can also see that around 3/4 of its application will be in the smartphone IoT, 5G, baseband processor, mobile devices, and also digital TV. The third company we want to introduce is Delta Electronics. So it's a global leader in the power system solution, including EV charging system, so like charging station, energy storage, smart electric grid solution. But other than that, it also has a system for the data center, the ICT infrastructure, PV inverter, industrial automation, smart building, and also some specialties property facility. Overall, they have around 40% market share in the global server supply. So one may not realize that when we are talking about the AI themes, what kind of company will be benefit from it? Quite surprisingly, power company will be benefit from it, and the power management system provider like Delta Electronics will be definitely one of them, because the AI will consume a lot of power, electricity. So that's why there will be foreseeing a lot of newly built power plant will be setting up for the extra capacity need by the AI application. Goldman Sachs estimated Delta AI revenue could account for around 11% of total revenue this year. And potentially next year, we are talking about 20%. So you can see the growth kind of a profile from AI is also very strong for Delta Electronics. Another perspective to look at Delta is that it also has a very high sustainability aspect. So let's say in the S&P Global ESG score is among the top 1%, and is a constituent of the Dow Jones Sustainability Emerging Market Index, MSCI, the All Country World Index ESG leader, and also the FTSE4Good Emerging Indexes. So for some of the investors, they are particularly looking at the ESG sustainability kind of angle. Delta Electronics will be appealing, very attractive for them. The last one we want to introduce is the Hong Hai Precision. It's the largest contract manufacturer for the consumer electronics with around 40% market shares, with an annual revenue of close to 200 billion US dollar. I think it's best known Apple supplier with 50% revenue contributed by Apple, including like iPhone, MacBook, iPad. Uh, but at the same time, it also will be a very positive kind of a support from the upcoming AI power Apple products upgrade with the Apple Intelligence. At the same time, it's also have other major customers, including like Amazon, Huawei, Dell, Lenovo, HP, Asutech, Microsoft, and Alphabet. Uh, Other than the downstream kind of manufacturing side, it's also in the production of the upstream component, just as the electronic connectors, semiconductor packaging, and also metal casing for the smartphone through enlisted vehicle like Foxconn Industrial Internet and also FIH Mobile. Since 2019, around 5 years ago, it's also expanded into a new growth segment, just like EV, digital health, robotics, and also AI data server. If you look at the product line revenue in Q1, let's say this year, around 48% will be coming from the smart consumer electronic devices, 28% in the cloud networking products, 18% from the computing products, and 6% from the component side. So that is a very interesting mix in terms of the revenue. So that is the last company that I would like to share for this section. So I think that will be the end of the second section.
All right, thank you so much, David. For the second part, what are the top three takeaways that you want the audience to take back with them?
Sure. The first point is that the Taiwan market is actually very strong. So other than the US market, I think investors is definitely look at the Taiwan market. And second is that how to capture it is through the premium strategy, which is one of the lowest kind of cost and also very highly efficient trading in the same time zone with very minimal operational hustle. And then the third is that the strategy is a very diversified and will be benefit from the upcoming semiconductor cycle turnaround and also the AI theme uh, 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 getting more popular.
All right, thank you so much, David. All right, members of the audience, once again, thank you for tuning in for part two of why Taiwan and how you can capture the opportunities in the Taiwan market. And before we go, I just want to share with you how you can start your investment journey by downloading our free ebook. Scan the QR code on the right there, and you can get this free ebook to give you some tips and tricks on how you can get your started on your investment journey and then you can learn how you can basically build your own portfolio and get started on your investment journey. The second thing I would like to share with you is how do you trade ETFs? Well, you download the Phillip Nova 2.0 suite, of course. To try a platform demo, scan the QR code on the right, and then you fill in a very short form, and then you can get started with your trading platform demo. All right, that's all the time that we have for you today. Hope you enjoyed the content that was shared by David. And David, thank you so much for sharing your valuable insights. And thank you for being a very patient speaker and taking our questions as well.
Thank you.
All right, that's all the time we have for you today. Till our next live webinar, take care and all the best. We are trading.